students to join Radiophage as their living classroom. So they get to understand what entrepreneurs are like, what are the issues of startups. And he runs the ITE, no, program in the Ateneo. So anyone else from other universities, make sure to make friends with the other guests here. So just to manage your expectations, we run this program for an hour. We don't like to linger, so we keep it concise, tight, and please, the program is only as good as you make it. So when we do shift to the Q&A, please don't be shy with your questions. It's your chance to really engage our speaker who's not often accessible. So our mission in Kickstart is to make experts like our speaker tonight to be accessible to entrepreneurs. So don't waste it. So our speaker tonight has over 25 years of experience as an economist. And today, he will walk you through the global and Philippine macro challenges and outlook and what it means for you in your job, whether you're an entrepreneur, a member of the academe, corporate, what have you. So really, it's your chance to understand from his point of view what these things are and how important are they for you. So I won't repeat what's on the board or wall. And his bio naman is in the registration page. What is here? Okay. So I won't take long. Now, I'd like to introduce, and I'm very pleased to introduce our speaker tonight, Mr. Jun Neri, economist and SVP at BPI. Where's June? Hi, June.
Hello. All right. So here, okay, a pleasant good evening to everyone. Feedback agad. First, let me thank Minette for calling me early this month. Yeah. Sorry, emailing me early this month to invite me to this event. It's the first time actually doing this in this kind of a crowd. And I'm actually happy that there are only very few institutional or big clients or big businesses here because those are the usual listeners to my presentation. So it's a very diverse crowd and something I'd really like to get ideas from as well. No? So this is a room full of innovators and creative people. I don't consider myself creative nor a big innovator, but it's just such a big thing for me to be with you tonight. So so many things to talk about actually, and we might run out of time. But in the interest of keeping it to say a 30 to 40 minute presentation, I'll limit it to just a few topics. No? So before we actually jump into um, our outlook on the Philippines this year, I'll provide a perspective, no? Because I'm an old person. I'm almost 60 years old, no? And it really helps to have seen what the world was like. And in fact, as mentioned by Pia, I've been doing economic analysis even before 2008, even before the global financial crisis. And that really has an important implication, I think, to that I can share to you tonight. No? At any rate, it sounds like a very intriguing title. Don't worry. It's not going to be as deep as it looks like. No? It's actually quite simple what I'll be sharing with you today. But very quickly, what does normal for longer mean? You all hear probably lower for longer or higher for longer. Normal means where we are today is probably more normal than where we were between 2008 and 2020. No? Okay, I'll explain it in more detail, but that's exactly what I mean in this part of my title. But funding thaw and deeper winter, I learned this from Selena, no? Because Selena, yeah, by the way, thanks a lot, Selena, for helping me out in today's event. No? Um, the funding winter. No, that's the first time I heard that the term from her. No, and I guess people are anticipating whether this winter is about to turn to spring or to summer. No, and my point is we don't need to wait for summer. No? This is a normal situation. I think it's going to be persisting for maybe another 3 to 5 years. And it will be up to you to make most of the next 3 to 5 years to run your business as well, to grow your ideas. No? At any rate, since BPI is a sustainable company, we don't want to be printing out paper for you to refer to. You can just scan the QR and you'll have access to my slides today. Yeah. So if there's something that you don't see in the chart from back there or from that corner, you can use your device to look at it. Okay, wala bang advertisement ng BPI? Wala? Wala naman, no? Okay. It went straight to the slides. Okay. Okay, so it's about 99% true to what I'll present today because I did a few revisions. Some of you already heard about uh, fourth quarter growth in the Philippines being reported this morning, right? A little bit disappointing, but still fairly positive. No? Okay, so I hope you got the copy already. No need for us to email you my presentation this evening. No? Of course, with the usual disclaimers. No? If something here turns out to be wrong, BPI is not culpable. No? Okay? Okay. All right. Only me. Only me. Okay. All right. So I don't know how this will start. Yeah. So I was very lucky to have watched the live game in Oklahoma City last early this month, I think. Yeah, something like January 2 or 3. No, and I used this photo which I took myself because I didn't want to download from the internet and steal someone's photograph. But I wanted to. I highlighted a color. What color do you see? For those who are colorblind, red or orange. No, yeah. And it's the same as the color of, I think, OKC that night. It also highlights the shot clock. No? Now, what's the importance of a shot clock in my presentation tonight? Uh, tells you about time limit, right? In fact, in 1954, when the shot clock was introduced, basketball became such an exciting sport. That's why some of the richest athletes in the world today are where they are. It's because of that shot clock rule. No? You should watch a game that was held before the shot clock was invented. And basketball was so boring because you could move around the court as long as you want, and people would get bored, no? Without that time limit of 24. Now I'm using that uh, uh, okay, that image where that concept uh, to for you to realize the importance of inflation and interest rates. No? Because for many businesses, during the time when interest rates were zero or negative, no, they enjoyed easy access to funds, right? Which is like a winter today, right? It's so hard to gain funds very easily nowadays, right? Because the risk-free interest rate, or maybe just a deposit in the US, for example, will give you a very rewarding yield of, in the US today, I think 4.5%. For the Philippines, it will reward you with 575. No? Just put it in the central bank and you will earn 575. After 30 days, after 90 days, you will get the interest and your principal, right? So you have to compete against that. If you're an innovator, you have to beat the 575. No? Okay? And like business models of Uber and these big companies, no, where focus was mostly on growth without having to show any income for 3, 5, 7, 10 years. I don't know what the history is, but it's very hard to pull that off these days. These days, you have to show discipline in your cash flows, and even if you lose once in a while, you have to churn out some positive cash. okay, to show to your creditor, to show to people who are investing in you, investing time and resources with you. And our forecast today will precisely cover that concept. No? Okay, again, it made basketball the most exciting, if not one of the most exciting sports today. The shot clock is like your interest rate. Okay, interest rates, unfortunately, if they are made negative or too low, have a lot of side effects. No? And innovators know this. I'm sure you know Joseph Schumpeter. No? He's the most famous economist in the area of innovation, disruption, and creative destruction. Okay? So he believes in interest rates being positive, not zero, not negative. Okay? Why? What are the unintended consequences of negative and zero interest rates? So it's coming out like a lecture. It's coming out like a lecture. Okay. Yeah, before I share my forecast, let me lecture a little bit. No, here the importance of my age is very crucial because the data goes back all the way to 1990. Many of you were not born yet. Yeah, maybe somewhere here. Just before. Okay, okay. Yeah, pareho tayo, mukhang young, no? Yeah, so, but what's my point here? Why did I show this graph? Most people say that 2008 to 2020 are the normal years, right? Normal being interest rates close to zero, only very seldom above 5%, right? People say that's normal. But the truth is, that is the exception, not the rule. This is normal. And if you bring back the data all the way to the 60s, even as early as 300 BC, these were the abnormal years. So if your tech company was not able to do well during this period, it's going to be very difficult for you to navigate in this period, which I think, or we think, will be more like the normal years. Is that making you sad? Do you want to go home already? Let me explain. Let me explain. No? Yeah, so these were our central bank governors from all the way back to the 80s. No? So again, the old side of me is showing. No, these were interest rates back in the 80s. No, and only started to actually go down during Tatanko's time below 10%. But for most of my grade school, high school, college life, the interest rates were closer to 15 to 25%. That's the shot clock of the 80s and the 90s. No? And the 2008 to 2020 phenomenon was actually an exception. Yeah, so Dr. Jokno, Nestor Espinilla, and the likes, we had negative interest rates with them, meaning the interest rate was lower than the inflation rate. Okay? They were the exceptions. Okay? So parang you're sad already, no? Making you sad. Now, what's the problem? What's the problem with zero or negative interest rates? Anyone here from the online or offshore gaming business? Buti na lang, wala? Oh, okay. Okay. When interest rates were 2%, 3%, maybe 4% back in 2016, 2017, okay? Those who had excess funds were looking for places to put their money in. And the big story in the Philippines in 2016 to 2022 was what? Online gaming. So if you were looking for places to put your money, you couldn't find any interest rate above 3% for government money, or a deposit in the bank would only give you 0.5% or so. You would have probably invested in some kind of business that had something to do with online gaming. Okay? And most property developers got into that space, no? However small. Problem is, when money was so cheap, a lot went to these online gaming companies. And now, after about 10 years, 8 years, vacancy rates 50%. Makati Fringe 43%. Ghost towns, no? Practically. Because it was so cheap and you couldn't find any other alternative of a safe investment, people started to put or make very bold steps, putting their money in these types of property developments, which are now not doing very well and has led to an excess supply of property here in Metro Manila, specifically in the Bay Area. If you go to the northern part of Luzon, Pampanga, and Tarlac, so many ghost towns. No? So that's a one unintended consequence of low or negative interest rates. No? Cheap funds can be very easily allocated into businesses like that. No? And it happens not just in the Philippines, but in many countries. No? They bet on these higher risk investments, no? That eventually lead to problems for the investors. No? Yeah, I was quoted in, thank you to Doris, anyone here from the media, I hope not too many, no? Quoted me as saying, beware of zombie firms. What are zombie firms? So, winter, di ba? Parang you remember Game of Thrones, di ba? That's such a great, epic series where at the end, the zombies came out, di ba? Uh, you could say that this is true for very low interest rates and negative interest rates. They actually breed zombies, no? These are big companies, or no, not necessarily big, but companies that don't make money for many, many years, but because of cheap funds and very good marketing savvy, they're able to bring in a lot of investors. But when the money starts to dry up and the economy starts to see a downturn, a lot of them aren't able to actually show the profits that they promised at the outset. No? And they actually aren't even able to service the interest by which they borrowed, even at the very low interest rate environment back in the late 2000s, early 2010s. No? So these zombie firms are essentially companies or even banks in Japan, for example, because interest rates in Japan are very, very low, for some time even negative. How can you make money if interest rates are negative, right? Unless you get depositors who you actually pay to park their money with you, no? In such huge amounts. No? So you end up with a lot of zombie companies that drown in debt, who can't even service their interest payments, no? Because of the changes in the environment. So your favorite economist, Joseph Schumpeter, the king of innovation in economics, actually said that the zombie firms who the banks lend to, who the investors lend to, spent their resources with, actually end up depriving startups. Why? Because the funds are locked with them and they are immobile. They're not moving. It's not being put to good use. No? So that's the second major unintended consequence of negative or zero interest rates. No? The third is inequality. So when interest rates are too low, boomers, am I a boomer? No, I'm a Gen Z actually. Technically speaking, I'm Gen Z, di ba? Oh, yeah. So 70s, yeah, so we're Gen X, sorry. And if you bought a house when you became a professional, if you're a Gen X, you'd have made a lot of money just holding on to the house. Diba? Diba? Lots of people in big privileged villages here in the Philippines became billionaires, multimillionaires, just by making sure that they have a roof over their heads. No? Problem with negative or zero interest rates is it makes property and asset prices increase too much. No? How much is a share in Manila Golf today? Not that I am jealous of Manila Golf members, but it's about 70 to 100 million. No? Just because the piece of property it stands on is valued so much. But the point I want to make is It's okay if wages increase as quickly as asset prices. They don't. And for the Philippines, these are the actual indices. No? This one is a simulation. It's probably even understated. No? But it shows that the gap widens significantly. And this can cause a lot of polarization. No? Inequality is never a good thing, right? Negative interest rates or zero interest rates actually aggravate that situation. So, bottom line, the message I want to put across is be careful what you wish for. Don't wish that shot the clock disappears. We need the shot clock for us to work more efficiently. LeBron's muscles wouldn't be as big as they are and as efficient as they are if it not for the shot clock. The same way that great ideas and good businesses, no? Effective businesses that are sustainable, okay, have to respect the presence of some interest rate. Doesn't have to be 20%, 10%, but nowadays people complain even about 5, 4, 3%. No? Okay, that's the point I want to make before I share my forecast. No? Okay, so again, a lot of negative interest rates money went to offshore gaming, online gaming that are now being abandoned by the Philippines. So, yeah, these are the three side effects just to summarize. But the bottom line, I guess, is again, you guys are the ones who know this best. No? Focus on these basics. Again, and identify an unmet need, continue to innovate, adapt, and persevere. Those are the principles that you all know and should actually be teaching people about that will allow you to thrive even in an environment of funding winter. We don't need to see summer or easy money for our lives, for our ideas to prosper. Okay? Okay. I hope you're not sad. Okay, and learned a thing or two from my lecture of sorts. Now I proceed to the forecast. Okay, so external themes. The biggest external theme this year actually happened in early November. Not just because Mr. Trump won the presidency, but because there was a red sweep. What is a red sweep? A red sweep is where Congress and Senate is actually also won by the Reds, by the Republicans. Our forecast last year is there would be a mixed government of Reds and Blues. That's why we had to revise our forecast because we were surprised by the outcome of actually a sweep. And that has very serious implications because what Trump wants to pursue will actually be supported by the two other branches of government now. Okay, and that will mean things will be done quickly. If there is anything he wants to get done, he has the support of both the Senate and the Congress. Okay. And then part two, I'll focus on the Philippine economy. No? Do you know what happened to the price of rice last year? It went up by 24% at the peak, no? Versus the previous year. It hasn't gone back to half of the gain it saw in 2024 from where it was in 2023. It's still expensive. Okay. And then finally, interest rates. No? That's why I gave you a lecture of sorts at the start. Where is our outlook on this? You probably already know the answer because of what I presented earlier. No? But let's focus on the US first. Even before the red sweep, even before Mr. Trump won, inflation in the US was bottoming at a certain level, maybe around 2.5, and now starting to accelerate again. The target of the US Federal Reserve is 2%. And it cannot continue reducing interest rates if the actual inflation numbers stray from 2%, which is why last night, Philippine time, yesterday, US time, the US Central Bank, the Federal Reserve, decided not to reduce interest rates. After reducing interest rates for 2 consecutive meetings, they didn't cut it last night. Why? This is one of the reasons. And inflation is starting to reaccelerate. And what's the most persistent contributor? Housing. No? So, so rents are still expensive. The other thing is growth. Growth in the US is above their trend or above the usual growth, average growth rate. No? They're anticipated to grow by 3% in in the fourth quarter of last year, and a full year growth of somewhere between 2.5 and 3. We all know that Europe isn't doing so well. Many countries are in a recession. Uh, China is no longer the 7, 8, 9, 10% growth economy that it used to be, but it's still at around 5, 4, 5%, just like the Philippines reported this morning, growing only by 5.2% in the fourth quarter. Now. But we've heard during the campaign that Mr. Trump has plans to implement taxes on imports or so-called tariffs, no? Of as much as 60% for China, and more recently, very firmly, 25% on Canada and Mexico, which he said he will announce on early weeks of February. Now, I just showed you a chart on inflation earlier. What do you think is the relationship between inflation and higher taxes of imported raw materials, intermediate products, and final goods from Canada, Mexico, and China? Inflation will probably go up. Okay, further, and by so much. Am I running out of time already? Okay, thank you. So that alone can be very inflationary, and that will stop the Federal Reserve from cutting interest rates. In fact, they might even, in one scenario, even consider increasing interest rates. So the winter could actually get deeper if that scenario happens. But, Mr. Trump is a pragmatic politician. No? Do not think that he will want to increase inflation just to meet a certain political objective. He may only be using this as a leverage, no? Remember, he has a book called The Art of the Deal. No? He's a deal maker. He might just be using this as a strategy for negotiation. He might be asking for something else. No? That's why he's talking about the threat of tariffs. So it may not actually end up as inflationary if he doesn't pull the trigger on inflation, on tariffs. No? Okay? Is that clear? So there's on the one hand, on the other hand. That's why they say economists have many hands, no? Yeah. Okay. But that seems to be the central scenario. Now, should the Philippines be worried a lot? Of course, we should be worried because we are all interconnected globally, right? But just from this perspective on what we sell to the United States, we are the red line here, down here, not the orange one on top. Sorry, they look alike, but the Philippines here is the second to the lowest, right? What does 111 mean? It means that exports of the Philippines to the US in the last 12 months is only 11% stronger than pre-pandemic or the 2019 period. So we didn't really export all that much to the US compared to pre-COVID. Whereas Vietnam is very worried because their exports to the US is almost 3 times bigger than what it was pre-pandemic at 2.74 times. Okay? So they should be more worried than the Philippines, who is down here. China, unfortunately, isn't able to export much to the US. It's actually down 20% compared to pre-pandemic. So really, even before the tariffs were announced, the US has been very protective already of, about Huawei, of course, no? Okay, some Philippine companies who have US software do not use Chinese software mixed together because it could get combustible mixture, no? Of sorts, no? How about China? Who exports to China? In this case, we are at the very bottom. Our exports to China in the last 12 months is still 7% below pre-pandemic, whereas Indonesia is already more than double. they should be more worried about tariffs than us. No? Again, not to say that we are not, we shouldn't be concerned, but they are probably more concerned than us. Okay? I hope that's clear. So we have an advisor from a French European company in BPI. You know? They're called TAC. It's a boutique advisor. And they painted for us three scenarios under a Trump administration for four economic variables: growth, inflation, interest rates, and US Treasury yields. And for these three scenarios, we are hoping for, and we're actually adopting the scenario where Mr. Trump becomes a pragmatic president. And a pragmatic president, a Republican president, if he's to be practical, will want his party to win again in 2028, right? If that's the case, then you don't bring the US economy in an inflationary environment. You don't bring the US economy in a high interest rate environment. You don't bring the US economy in a recession. You will do whatever you can to avoid all of those things. That's why we think the pragmatic outlook is the more likely outcome. Okay? We don't believe in the MAGA dream either, no? Because just as an example, there was talk about cutting down the size of government by $2 trillion. No? And we look at the agencies that were talked about. They're not even 15% of the U.S. Public sector size in terms of workers, and it's not going to translate to even hundreds of billions. It will only be in the tens of billions. No? So a lot of them are really typical campaign promises that are not meant to be fulfilled. Okay, so given that, or despite that, don't be surprised. Any form of rhetoric from Mr. Trump will move markets very quickly. You can see, of course, the other one, the most recent one is the big downturn in the decline in NVIDIA's price, right? Being affected by DeepSeek or whatever. I can't even remember the name. But it's really hard to tell whether this is really the reason for NVIDIA's fall. No? There could be many other factors, like the Japanese government. The Central Bank of Japan just increased their interest rates Friday of last week. And the markets in the US were only woke up to the reality Monday morning US time. That may have actually been the trigger for the decline of NVIDIA, because some of the funds that are used to buy NVIDIA were actually from borrowed funds from Japan, what we call in treasury as carry trade phenomenon. Okay, so what good could come out from Mr. Trump's promises? He already has, I think, 39 executive orders as we speak, since he sat in Washington last January 20, and some of them could actually lead to slower inflation, like drill baby drill, right? And the peace in the Middle East, no? Could mean that oil prices can become more reasonable, which for the Philippine economy is actually very positive. No? Lower gas prices will help you enjoy more affordable logistic costs, right? It will help most Filipinos, where many services are very much dependent on transportation, being a services economy that we are. Deregulation can also help, no? If governments will really be more efficient, if certain industries can be allowed to operate more liberally, it can lead to efficiencies that will make the American people happy. But there is a tendency for Mr. Trump to undermine institutions, like, say, I can do a better job than Jay Powell, the head of the Federal Reserve, no? Saying that if I were there, I'd reduce interest rates. By just saying that statement, actually, he is already implying that I want to take over or something like that. No? Okay? And then, of course, the deportation. I didn't talk about deportation yet. A lot of Filipinos actually could be affected by this. If you're there, if you're a TNT, I hope everyone understands what TNT means. You're not a legal, you don't have legal documents to be in the US. Mr. Trump can deport you. No? He's also saying in a recent executive order that he will call certain types of industries in Mexico as terrorists. No? He will label them as such, which could justify a show of force, no, to stop all some kinds of activities. But anyway, the point is, it can be pretty unpredictable. No? Uh, our advisor from France is saying oil prices can actually fall under a Trump administration to offset whatever inflation can come from higher wages because of deportation or higher prices because of higher tariffs. And again, the Philippines will enjoy this very much if it does really happen. Okay. Now, how are other countries reacting? We don't know how they will react to big tariffs. No? China, even before Trump won, were somewhat anticipating it already. A lot of companies were actually starting to invest less in China, no? Late last year. No? And then the bank, the central bank counterpart in China started reducing interest rates even before Mr. Trump was declared winner. So they were already anticipating that it will hurt their economy if the tariffs are indeed implemented. No? Growth rate projections for China this year are all below 5%, whether you ask the IMF or private financial institutions. No? Again, in anticipation of what could be another trade, a very tense global trade environment. So bottom line, again, the US was already strong even before Mr. Trump won. No? And that meant lower interest rates were unlikely, even if Kamala Harris won. No? But the fact that he won makes it actually even more compelling that growth will be pretty vibrant and inflation could actually be fueled by higher tariffs and deportation, hopefully offset by lower oil prices. What we know is that China and the Euro area will probably weaken in such an environment, continue to weaken, especially in Europe. Okay, are you okay with part one? So if you're listening to this coming Sunday to a priest, you don't know what time he will end, right? Me, you already know I'll be ending soon because I've already done with part one, okay? Okay, I'm not a priest. I'm not a priest. Okay, so we now move on to the Philippines, which is something I'm a little bit more familiar with now. For the foreign stuff, I heard that there are a lot of delegates here from, well, not delegates, but guests from the embassies. Maybe you can share your thoughts later if you'd like. No? But this is the latest from the Philippines. It was pretty disappointing for the fourth quarter that we only grew by 5.2%. A lot of countries will already be envious of 4% growth, even more 5.2%. But it's below the government target of 6%, so quite a distance now. And the full year growth of the Philippines last year was 5.6, improving very slightly over 5.5 in 2023. Again, it's good that we have young people who are working. No? Working age population is so huge that very hard to imagine consumption really declining significantly unless something like COVID happens. No? Okay. So, but we are still the valedictorian. We were valedictorian here, right? Number one. Now we are number two. Far second though at 5.6%. What drove that slowdown? Consumption, surprisingly below 5% growth again. Typically, consumption in the Philippines would expand by 5% or more. And since it contributes around 65 to 70% of GDP, really contributes a lot to overall output. Now, if that slips to less than 5%, then that means that growth will really be compromised. No? So consumption for the whole year of 2024 grew only by 4.8%. Does this have a pointer? Yeah, it does. So I don't have to keep on going there. Okay. All right. So investments also slowed down, but still a positive thing. The same with exports and government spending because the elections are coming soon, right? Quite strong at almost double-digit growth rate. We can expect that to continue in the first 4 months of this year. What they get from the budget, they will spend in the economy, so they will win votes in their respective. That's why the roads that were okay, they destroy it so that they can rebuild it again. Sorry if there are politicians in the tech sector, no? Okay. Agriculture was a big drag. Again, climate change, another threat to the outlook, no? Always a threat nowadays, no? It's not so much the temperatures, it's the extreme weathers that affect us significantly. And agriculture was really hurt significantly in 2024. Again, no? Okay. So Vietnam is very impressive, growing at 7.1% for the full year of 2024. Only them and Singapore are out. We're growing faster than Singapore, but Singapore is rich, so they don't have to grow as much as 5% anymore. Okay, so this is a very interesting concept. No? Growth almost always above 5%, except for 3 of the 4 quarters of 2024. 47, 47, 46. Notice, do you notice what affects the number hitting 5% or less the most in the bar? It's this blue thing, right? When the blue thing disappears, it becomes soft. And it bounces back, it goes back above 5. And it's very soft again. It's food. No? So food, particularly non-rice food, Filipinos spent a lot less in terms of growth rates compared to previous years. Why? Because rice became so expensive since last year, no? Since actually late 2023. And for those of you who love economics, you know the concept of the giffen good, where if the price of something goes up, there's actually more demand for it. Aside from luxury goods, no, because people want the prestige, they buy the LVs, the expensive brands for the prestige. That's a different kind of good. No? In this case, it's an inferior good, more specifically a giffen good, where if the price goes up, people actually spend more on it. Why? Because rice is a staple that fills up the stomach, right? If you buy more viand, which has become more expensive, you'll get a lot less satisfied, right? Than if you buy more rice, which is become more expensive, unfortunately, it will still make you feel more satisfied. Anyway, go back to your given good concept if you aren't able to comprehend that. But here you can see, no, that while the price of rice has gone down by 20% for both Vietnam and Thailand, it has only gone down by 0.8% year over year for the Philippines. So there has been no meaningful drop in the price of rice that will make the ordinary Filipino become more confident to spend more on other things like toasters, other types of food, vegetables, meat, no? Because they're spending so much on rice and maybe their transport cost. No? And until we see a meaningful drop in the price of rice, very hard to imagine 5% growth in consumption coming back again. The good news though, okay, so finally, the good news, no, is employment is very strong. No? You all know, you are the guys who know this, no? Virtual assistants, no? People are in the online space, they don't work for 8 hours a day, but they have work and they can pay for their bills. No? 90, 97, almost 97% of the labor force in the Philippines have a job. Some of them less than 8 hours. And those are part of the almost 11% of the labor force, those who are not able to work more than 8 hours a day. But this is a record low. 3.1 is a record low. 3.2 is not too far from the record low. 4.6 was the pre-pandemic unemployment rate. We're actually in a much better employment situation now than prior to the pandemic, when interest rates were close to zero, interest rates are positive, and yet we're able to generate more employment. So it's not all about interest rates. No? It's all about many things. Again, innovation is one of the most vital inputs to that. No? Now it's allowing generating jobs in many sectors of the economy. No? During the pandemic, it went to agriculture because agriculture didn't need to be distanced. No? You can actually distance yourself from each other in agriculture. Most other industries did very poorly, but now it's the services sector which is doing very well. And what we like the most, and glad to have spoken with Shad earlier, the employment situation is actually improving outside Metro Manila faster than NCR and the metro areas. No? There are more jobs being generated there. They don't have as much incomes. They cannot buy a Tesla. They cannot buy all of these things that we enjoy in Metro Manila, but they're improving from where they were 2, 3, 4 years back. No? So this is also a phenomenon of remote work, right? Some people who are from the provinces decide to stay there and do all sorts of other stuff rather than going to Metro Manila to buy and pay for a condominium and spend so much on transport costs, spend 2 to 3 hours on the road going back and forth to work. No, so they would rather be there earning a little less, but actually with a better living standard. Okay. Fortunately, our overseas kababayans still continue to bring in about $35 billion in 2024. Probably a lot more in 2025, growing anywhere between 2.5% to 3.5% per year. And a lot of them go to regions 3, 4, and Metro Manila, of course, 9.6% go to the NCR. No? Vehicles, no? That's why you have to have adult diapers with you all the time. Almost 500,000 were sold last year. These are for for passenger and commercial vehicles. No? Motorcycles, I think more than 1 million were sold last year. No? But the reason why I'm warning you about adult diapers is the traffic is going to get worse. No? You have to have diapers with you. So that will be from 470,000 last year, will be 500,000 this year, based on our model of per capita GDP and car sales, vehicle sales. So I see a lot more Teslas in the road, right? Very affordable. Very affordable compared to the other. I'm from Ayala, by the way, so I shouldn't be announcing that too much. Here, the importance of employment being very strong. People can pay their credit cards without defaulting. There are no meaningful increases in non-performing loans, despite almost 2 years of 30% ramp up in credit card. Huh? Of course, we don't like people to be too dependent on debt, but because of the better employment situation, people are able to pay, even sometimes late, but at least at some point they're able to pay for all their bills. No? Okay. And it's happening in autos, not just credit cards and personal loans. No? So you don't have to approach me, just cross the street, BPIS over there if you want a loan, a personal loan. Okay? I'm not advertising Mineta. Okay, so government has been spending, as I said, politicians want to win. They want to show off. What we are uncertain of is what will happen after the May elections. They will probably start moving out and buying stuff from abroad. That will not have a multiplier effect on the economy. But for the first semester of this year, because they're spending money within the economy, that will have a multiplier impact. That is why growth can actually be faster in the first semester than the whole of 2024. Now, again, I already mentioned this in the creative destruction topic earlier. We decided to pivot away from certain things, including online gaming, offshore gaming. Why office condominiums? Because, again, remote work, because of work from anywhere. No? Even the existing offices these days are being retooled, they're being redesigned so that it will attract workers of this new environment, of this new age. No? So COVID taught us so much. No? That so many things can actually be done without offices. That's why there's an actual pivot away from office. This is a challenge to the property sector, a big challenge for the property sector. But challenges, yesterday was Chinese New Year, is the same symbol as opportunity. So some will actually find this as an opportunity. Maybe they can repurpose some of these condominiums to become, maybe to house some of your ideas. No? Okay, pero tumawad muna kayo, mas babaan pa yung presyo, di ba? Okay, yeah. Okay. Because private construction, believe it or not, is still about 16% below pre-pandemic. Okay? The private construction sector hasn't even gotten close to 10% below pre-pandemic. They're still 16% off pre-pandemic. And if you break this down between residential and corporate, corporate is worse at something like 67 or 70% only. There's just too much inventory of property there. And prices of property in Metro Manila and the metro areas are still too expensive, no? At this point for the equilibrium to bring back demand to normal. Okay. Prices of property falling by 15% in NCR, increasing by 3% after several quarters of increases in areas outside Metro Manila. That's where you should be. Okay? That's where BPOs, when they set up, are actually able to pay their people better because the cost of rent and the property itself is not as expensive as Greater Metro Manila. And in terms of, again, breakdown, I'm running out of time, so I will not explain that in detail. This one you already saw earlier, no? And again, office space transactions are improving in areas outside Metro Manila. Okay, so that's where you should go. It's more affordable, and the price uptick prospects are actually. So I won't discuss them anymore. This is what I talked about in the last 10 minutes or so. It's just here for you to be able to refer to them as a summary for the positive things that can boost the economy further. The Bangko Sentral, BSP, is the counterpart of the Federal Reserve in the Philippines. They will do measured reductions in interest rates only, not big reductions, no? Because of many reasons, most importantly, the peso. They don't want the peso to be too volatile versus the US dollar. I have a forecast on that too. No? But not all forecasts are meant to happen, right? Okay. That's why economists walk very carefully because they have crystal balls, right? Sorry, that's an unwholesome joke, no? Okay, so if online or offshore gaming, okay, is not to succeed, there are these sectors that can help make up for it. Okay, something like 250 billion is being spent in accommodations as we speak, and that can continue to grow. Something like 20 plus 16, that's around 40. Close to 50,000 rooms being built as we speak to add to the new hotels that we've already seen in Cebu, in Mactan, in many other parts, in Bohol, in Boracay, and of course in Palawan, where Ayala is. No, that continues to be a very strong space, and that's real tourism, not like offshore gaming. No, okay. Foreign tourists, nothing close to Tokyo and Osaka, where I think half of the population are Filipinos. When you go there, no, shopping, eating in the convenies, no, okay. Many of them are going out. That's why our dollars are getting drained. No, we're spending too much outside the country. But there are other areas like cold storage facilities. During the pandemic, I remember the price of pork was so unstable. It went up so much because of the African swine fever. No? We decided to allow retailers to bring them in for zero tariffs, but the price never went down. Why? Because we didn't have the refrigerants. They brought it in, they will spoil very easily. So why will you import a lot if there are no refrigerants? There are no cold storage facilities. So that's a good business that Ayala identified, building a plant in Laguna and in Cebu. No? Again, if you have technological solutions or ideas that will, these are multi-story refrigerants. Okay, so if you can use technology to make it more efficient, then go ahead and sell your idea. No? So more upside and downside risks. but I won't discuss them in detail. They're mostly self-explanatory. You probably know more about them, more about it than I do. Okay, now a little bit, there was a request to talk about the middle class and the high income classes in the Philippines versus the low income. This has been, unfortunately, data is only available up to 2021 now. And you could see that both the middle and high income classes became smaller in 2021 after the pandemic, no? Even a year after the height of the pandemic. Several factors, of course, affected that. One of them could be a very poor performing stock market. No? Our stock market today is lower than where it was in 2018. That's how painful it is. No, if your investor isn't giving you a nice valuation for your idea, it's also happening to many other big companies here. The PE multiples, the price to book multiples of many Filipino listed companies are so low these days, no? And no, all the money just wants to go to Nvidia and the Magnificent Seven. They're even avoiding Europe and South Africa and other parts of the world, no? They just want those seven stocks of the S&P 500, not even the 493, no? Okay? Uh, I don't know what exactly explains that. It could actually be related to interest rates in the US being somewhat elevated. But we cannot see a big recovery in high income class category unless the stock market starts to improve. Because there is such a thing as a wealth effect. If people feel less wealthy, they don't spend. Their net worth actually becomes a lot lower. Okay. So in terms of regions, this is the distribution. Metro Manila and Calabarzon actually are very big contributors to that. So you can again refer to this chart if you want to look for prospects on where to sell your products, where most likely it is that labor is less expensive, no? More likely it is that rent is more affordable. It's in the areas where average incomes are lower. No? This chart is essentially the same. It's just looking at it from a different angle now. Okay, so again, I'll leave you with these charts. I'm running out of time. I think the key message there is fairly clear. Most of the middle and high income earners get it from wages. No? You're an exception. You are in the other income category. Keep it up. No? That will elevate your status much faster, no? Than if you are like me, a wage earner. No? Okay. All right. So I cannot even afford to buy a battery of Mercedes-Benz. No, I was actually presenting this same set of slides to the CATS group, to the Mercedes folks, and I told them that my suit is cheaper than a battery of Mercedes. No, okay. At any rate, I'm done. The priest is almost done with his sermon, and the main message of part two is such: it's consumption cannot improve unless inflation really improves remarkably, especially the inflation from rice, no? Because of this Giffen phenomenon. Okay, so now the outlook. Now the hard part for me, and where you will probably have the most questions on. Last night, again, the Fed decided not to reduce interest rates. To some people, this is a surprise. To our team, no, we already knew because we could see that inflation was reigniting again. And then for their March 18 meeting, see how advanced we are. Huh? They just made a decision last night. We're already talking about the March meeting. There is only an 18% expectation that they will reduce interest rates. So another meeting where the US will not reduce interest rates. So unfortunately, the thawing is slowing down. No? Okay, the cold weather is not gonna get warmer anytime soon. No? I thought these were the stairs. No? Okay, so that in September, when the peso went to the 55 level, everybody was expecting the US to cut all the way down to 3.25% at the end of this year. The latest probability is that they will only cut twice this year to 4%. So, do you consider that winter? And can you thrive in that winter? So I think you can. Again, great ideas. The fundamentals have to be there, no? Okay, and you have to convince Minette that your story is good for you to get the funding, no? All right. Now, why do we think the peso will weaken? Again, this is a forecast, no? And again, forecasts are not meant to happen, no? Why do we think? This is the fundamental basis for it. Inflation in the Philippines, unlike the US, is on target. The central bank's target in the Philippines is 2 to 4. That's why we put a shadow portion here. As long as inflation remains within that range, the central bank can continue reducing interest rates here in the Philippines. Whereas in the US, it's above the shaded line. They cannot aggressively reduce interest rates. Now, if you have a deposit in the US earning 4.5% versus a deposit in the Philippines earning at the end of the year 25% or 5%, where will you keep, which denomination will you keep your money in? Unless you're paying salary to your workers and so you will probably keep it in dollars, right? And as long as more people believe that they should be keeping their savings in dollars earning 4% or 4.25%, they will sell their pesos and convert them to US dollars. Add to that the fact that we don't produce much as an economy anymore. We imported so much last year, no? That our operating dollar cash flow is again in a huge deficit. Yeah, by the way, this, I don't know if there's a coincidence, no? The online gaming happened here, right? The red line started happening when we introduced. But prior to that, we had surpluses, more dollars coming in from remittances and outsourcing than the dollars we needed for imports. No? Okay. Nowadays, they're not enough. Outsourcing, even data centers that earn dollars for us, not enough dollars to fund all the expenditures that we have for imports. No? You can see it here. In 2022, we imported 137 billion worth of goods. Just goods. Not even the trips to Japan. Not even the services. This year, it's going to end up a little closer to 2023 than 2022 because oil prices made this bigger now. But that's still huge. And the combination of exports and remittances, not enough to cover, okay, or too small to cover for that. So we add the outsourcing, but we also have to add debt payments here and some other stuff that the imbalance continues to be in favor of the US dollar. So bottom line, these are forecasts. No? Growth will be around because of the elections and slightly slower inflation because inflation was horribly high in 2022 and 2023. They are now going to be within target. That should improve consumer confidence. Unfortunately, the peso will have to take the pressure from the Banco Central reducing interest rates faster than the US Federal Reserve. So it's not because the Philippines is a senior citizen, that's why it's 60, no? It's because we spend more dollars than what we earn, and people who have excess savings would rather park their money in dollars than in pesos because of the attractiveness of US interest rates. Okay, interest rates could be on their way down. Again, we might revise this sometime soon, but because the BSP will reduce interest rates, then your borrowing rates should improve, but not by much. No? And it will not return to the 2008 to 2020 levels. No? So the shot clock will remain positive. So with that, final key takeaway, there will be downward pressure on Philippine interest rates, but there will be upward pressure on US dollar peso exchange rate. Okay? So it's a bold prediction. We could be wrong. By the way, last year we didn't do well in our prediction because the market was super volatile, right? If you remember, we started the year at 55.30. At some point, it hit, well, at the end of the year, 58.70. But as early as September, it went below 56, no? When people were expecting the Fed to cut more aggressively. So it's going to remain that way, very uncertain. But our central scenario is as such with all the warnings and upside and downside risks. Is that the same title? No, it's a different title, but actually, this is the same set of slides I wanted to share. That's my last slide. The pre-sermon is over. Okay, and let me take this opportunity to thank again Minette, Selena, and the rest of the Kickstart team for inviting me this evening to share our simple thoughts with you tonight. Thank you and good night.
Woohoo! Thank you so much, June. How was it, guys? Did you get enough information so you can chart 2025
Thank you.
safely? Or did it fly over your head like the diaper joke? Huh? So, natawa kami ni Monica doon. So, as we give June a breather, take his water, mindful of time, we have actually prepared questions for the Q&A. And because we like to keep to the time, we will do this by democratically. We will ask you to, where's the clicker? But it's all good. They actually needed to, we will ask you by clapping which question you want June to answer. Okay? Because we don't have all night for him to answer these really great questions. So if I say number one, you tell him by the yelling or the volume of your clapping or so question number one. Do you want him to answer this or not? Let him know by clapping or not clapping. Ayaw. Oh, buddy, June. Question number two. Uh, okay. Hint of a clap. Question number three. Pwede na. Question number four. Ayan, June. By a democratic vote. So let's want to take a stab at question number four. Here, let's swap microphones.
I presented so long that the microphone became low bat. Ran out of batteries. So again, you are the innovators, you're the creative people, you're the ones on the ground. I am up there with my concepts and my lecture materials, no, looking looking like a professor, no. But I'll take a shot at it because I think the comparative advantage of the Philippines these days continue to be in the services segment, no, and I think AI and robotics and all of these advancements should be uh, used as a complement rather than as a substitute. No? In a country like ours, where service workers are quite efficient, we can speak the languages, no, and the international language, and we are very trainable. No, okay. So again, I would always cling to that concept of who becomes disrupted in your team. For example, will your CFO be disrupted by AI? Will your CIO be disrupted by AI? Will your CEO? The answer uh, is it will depend on his competitors' ability to use AI or robotics, no? Because again, it can be used as a powerful tool to be able to generate more productively a lot of services here in our country. No? Be it in the medical field, which is very lucrative. No? I can see, for example, when I was in Hong Kong, I heard that just to get an appointment and consultation time with a doctor in Hong Kong, you have to pay the equivalent of tens of even hundreds of thousands of pesos. No? Whereas there are many hospitals in Clark uh, and hospitals near Clark. You can actually travel all the way to Manila to get your consultations in some of the better doctors here in the country for a lot less than that. No, so complement that with today's technology and resources. I think in terms of booking appointments and all sorts of transactions related to that, uh, I think it's going to be a very lucrative area. No? I've seen how services I was again, I mentioned earlier, I was in the US a month ago, and everything is so expensive, especially in the medical area. No? They're paid so very well. Why? Because medical practitioners cannot really be remote workers. No? They have to be there themselves doing the physical, like the ICU type of work in the hospitals. No? There's no way you can substitute that with remote or online. And because they have the option of online, you will have to pay them a premium for them to stay in their jobs. No? So those types of activities, if we can somehow use technology to serve other countries, again, virtual assistant is probably the most basic form of it, but I can imagine it being more complex in the areas of more complex types of services that Filipinos can be of service to, no? To foreigners. No? So that's all I can comment on this. Uh, Again, very crucial what the US does with its tariffs and deportation policy. That can be a changer by those two things can be game changers by themselves. No? So again, thank you for the chance to answer that question.
Hello. How about that, ladies and gentlemen? Off to a good start, bang. Raid the fridge for 2025. And I just really wanted to thank all of you. So as of 8:30, we closed registration at 130 guests. So really, it's off to a good start. It's a great number to start the year. I hope you come back, and we'll make sure that we keep delivering really good topics for you. And before we let go Sir June, I just wanted to acknowledge the RTF committee. So Monica here is a person here at Tech Booth.
Thank you.
And who else? Selena, of course. The one who really crafted this topic. It's all Selena and Yanni. And most important, were you nice to our frontliners? So where's AE and yeah. So I hope you guys were nice to them as you were arriving. We cannot make this work just by a few people. It really takes a team in Kickstart to deliver this. And it's 9:45. 8:45. We're open until 10. We have still plenty of beers, I think, and soda. So you can continue to raid the fridge. And on that note, let's all give June a warm round of applause. Thank you, June. I hope that they learned a lot from you
Thank you.
tonight.
Thanks again to the whole
What's your
Kickstart team.
LinkedIn there? What's your link? Do you want to follow them?
Sorry?
What's your LinkedIn?
LinkedIn, Jun Neri. Yeah, BPI,
Neri.
Lead
So
Economist.
you can follow him on LinkedIn. Thank you, guys. Yes, thanks for a wonderful session. And please go make 10 new friends and get more beers and soda. I don't think there's still food, but we try. Salamat.